Hello, everybody. Welcome back to Raid Digital. And now we've got a very interesting panel here about digital currencies, which several jurisdictions are starting to sort of to develop and potentially introduce. But there are potential pitfalls along the way. So here to tackle this topic of the perils and potentials of digital currencies, to moderate the panel is Professor Ulrich Bindseil, who's the Director General of Market Infrastructures and Payments Directorate General of the European Central Bank. So over to you, Professor Bindseil, to introduce this panel of esteemed experts, including Denis Beau, who is the Deputy Governor of Banque de France, who will give his opening remarks on this topic. Thank you, Ulrich.
Yeah, thank you, Ben. Thank you so much for having me. And we have an excellent panel of true experts in the field. You mentioned already Denis Beau, the Deputy Governor of Banque de France, who will also start the discussion. Then we have Kristin Johnson, Commissioner of the CFTC. We have Kilvar Kessler, who is the Chairman of the Board of the Estonian Financial Supervision and Resolution Authority. We have Girts, Berzins, who is Head of Digital Strategy of Group Channels and Technologies of Swedbank. And then we have Hamish Thomas, who is partner at Deloitte Industry Solutions. So we will have two rounds in the panel. And of course, a panel ideally is interactive. So I hope you will cross-comment with each other at the same time. We have only 1 hour, so let's just start. So, Denis, thank you for being with us, and you as a central banker, you are best placed to give us an overview, an introductory statement really for the panel to take up then the topic of CBDC and stablecoins and wholesale CBDC and retail CBDCs. So where do you stand in the euro system on that?
Thank you, Ulrich, and good afternoon, everyone. Maybe in order to set the scene, I would like to make 3 points. First, CBDC and stablecoins are prominent and most publicized output of 3 major disruptions of finance that digital technologies are bringing about, namely the arrival of new players, fintech and big techs, which to date have been subject to little or no regulation, the emergence of new forms of investment and settlement assets in tokenized form, usually referred to as crypto assets. Bitcoin is emblematic of a first generation of highly volatile cryptos whose use remains essentially speculative. The second generation stablecoins aims to provide a broader range of services, possibly with a global reach, with the support of mechanisms to stabilize their value against sovereign currencies. And the third major disruption, the emergence of decentralized market infrastructures based on distributed ledger and blockchains in particular. The combination of those 3 trends is translating into activities and services that first swept into the payment sector and are now spreading more broadly. Among them, so-called decentralized finance, DeFi, is emerging as a crypto-based alternative to traditional finance, where the provision of services is claimed to be disintermediated and their governance decentralized, and is enabled notably by permissionless blockchains, smart contracts, and decentralized apps. Digital innovation, therefore, act as centrifugal forces. They aim to create a movement of decentralization that runs counter to the traditional architecture of the monetary and financial edifice, centralized around trusted institutions, the central bank, credit institutions, and market infrastructures. The second point I like to make is that decentralization forces unleashed by digital technologies might have a two-sided impact on the functioning of our financial system, both in terms of efficiency and stability. From an efficiency perspective, they can bring in particular more transparency, cost efficiency, and availability around the clock. But they bring also a risk of fragmentation of processes if, for instance, the blockchains are not interoperable and cannot also smoothly interact with legacy centralized clearing, settlement, and payment systems. From a stability perspective, it is clear that currently the crypto ecosystem is not large enough and interconnected enough to threaten the stability of the whole financial system, as shown by the modest impact on mainstream finance of last year's turbulences in the wake of the Terra Luna and FTX conglomerate collapses. But these collapses did have significant negative spillover effects on the crypto ecosystem. In addition, the crypto ecosystem inherits and may amplify the vulnerabilities of the mainstream financial system as it grows and tries to replicate the functions of that system. And it introduces new points of vulnerabilities like bridges between blockchains or so-called oracles that feed data to blockchains. The third and last point I'd like to make is that the investigations undertaken by many central banks for the issuance of a retail and or a wholesale CBDC should be seen, in my view, as part of a broader response by central banks in line with their monetary and financial stability mandate to help bring the financial landscape which will result from these transformations within a confidence-prone regulatory and operational framework to help reap the benefits and master the risks of those transformations. At the Banque de France, our response is based on three convictions. First, the traditional pillars to ensure confidence cannot be replaced by any so-called algorithmic confidence, namely by rules of the game that would be coded once and for all, and for which respect would be entrusted to algorithms. Second conviction, confidence requires a regulatory framework that is clear, fair, balanced, and consistent at international level if we want to simultaneously encourage innovation, protect adequately customers and investors, and maintain the stability of our financial system. Europe has led the way in this field with the adoption of MiCA. It is important that its implementation takes place as swiftly as possible within a broader international effort building on the high-level recommendations developed by the FSB, and that it is expanded in due time to cover in particular the specificities of the DeFi ecosystem. The third conviction is that confidence requires maintaining central bank money as the anchor of the financial system. This implies that central banks revisit the central bank money services they provide with the objective of adapting them to the digital age. This is necessary for the services provided in the wholesale sphere for the settlement of transactions between financial intermediaries, which are the most important from a systemic risk perspective. Hence our strong and early involvement at the Banque de France in a large-scale experimentation program on wholesale CBDC with a number of market participants, and the announcement by the ECB a few days ago that the Eurosystem will explore potential solutions for central bank money settlement of wholesale financial transactions recorded on DLT platforms. Adapting our central bank money services might also be necessary in the retail space. Hence, the in-depth investigations led by the ECB with the NCBs of the Eurosystem. A digital euro would contribute to the anchoring role of central bank money by offering to the general public central bank money in a form that would be complementary to banknotes and adapted to the growing demand of the public for digital payments. In addition, a digital euro would contribute to strengthen our strategic autonomy. To conclude these initial remarks, let me just stress that it's not clear, at least to me, what is going to be the destiny of digital finance and the shape that the financial landscape will eventually take as a result in the medium term. Market forces will decide. But what is clear to me is the role that we, as central banks, should play, which is to make sure that the shape evolves in a confidence-prone regulatory and operational framework, which implies that we play an active role to help build that framework on both aspects in line with our mandate. So let me stop there, Ulrich. Back to you.
Sorry, thank you very much, Denis. And indeed, this was a very good, I would say, overview, making all the links. So let me continue and check if Kristin Johnson is in the call. I must say, I don't see her. Maybe she couldn't join at the end. Okay, let's see if she will come later. And now then let me move to Kilvar. Denis already mentioned MiCA as the European, let's say, contribution to regulating that DeFi space. And I don't know, we also had our perspective on the crypto winter and all the things that have been happening in 2022 in particular. So what is your perception in Europe from a regulatory perspective of where we stand, and do we have addressed all the issues with MiCA?
Thanks, Ulrich. I think the regulatory job, what comes to Europe, has just started with MiCA. Well, Europe has many different perceptions. I think the crypto believers have one perception, small investors have another perception. From my supervisory angle, I think there are different views to crypto and crypto winter. But some background for you before answering the question also on MiCA. I'm coming from Estonia, and my country has been open to blockchain technology from the beginning of this century. Our e-government is quite successfully using this technology. So second, Estonia has very lively startup community with quite many successful unicorns such as TransferWise or Wise, Bolt, Pipedrive, and from earlier days also Skype. Estonia has the most unicorn businesses per capita of any other country in Europe. Third, our existing financial services are highly digitalized. So taking all this, we had rather and still have rather positive attitude towards WASPs and cryptos. There was a view that blockchain is another good technical vehicle or form for financial services. In the light of that, already in 2017, my authority, Finantsinspektsioon of Estonia, issued a regulatory statement on ICOs. There we explained what the issuer and investor should take into considerations, risks to be taken into account, etc. Please note that the first white paper on ICO ever in the world was made public in 2012. More, in 2017, Estonia adopted law on WASPs. This was done as a part of our AML regime. The law was a pretty basic legal act, but availing WASPs to register their activities with Estonian FIU. So now fast forward to 2023. By today, we have learned that the FIU was not the best choice to deal with WASPs. There are not only money laundering, terrorist financing risks involved, but also reputational and financial risks, and there is a consumer protection angle to the story. Number of WASPs registered in Estonia peaked around 2020, but by now has decreased to around 100 licenses due to renewed FIU agenda to substantially mitigate risks. While Estonia passed last Moneyval FATF evaluation with flying colors, evaluators pointed out that the regulation and supervision of WASPs needs to be improved. Thus now I'm getting closer to MiCA. This is the EU regulation on markets in crypto assets, which harmonizes respective national rules across the EU. For me, as former security supervisor, MiCA is quite familiar piece of legislation. I would say it is a light MiFID, and MiFID is the EU directive on markets in financial instruments, and light MAR, that is the EU framework to attack market abuse. MiCA has also certain prudential requirements and rules for offerings of crypto assets. MiCA establishes mutual recognition regime and pan-European supervisory mechanism. Maybe the latter and maybe the whole legal act is overly complex, but for my eye, it is better than current situation in Europe. Thus, all in all, crypto winter perception has been different among interest groups. In Estonia, for example, it has been a bit negative, seen as a spillover of classical fraud to innovative segment and thus tormenting the latter. Perception of MiCA, on the other hand, has been quite positive among professionals, as it creates better opportunities to squeeze out bad actors and leave room to legitimate players with better protected consumers.
Many thanks, Kilvar. And now Kristin joined. So Kristin, thanks for joining. And you missed Denis' initial intervention, but you heard Kilvar starting on MiCA, talking about MiCA. And you, from the US perspective, what is your take of the events of 2022, in particular, the crypto winter, and what would be the regulatory lessons, the response from the policy side, from your CFTC perspective?
Well, thanks so much. I'm very grateful to be able to join you all today. I have to open by sharing that the remarks I offer today are reflections of my own perspective and not the perspectives of the commission, commission staff, or my fellow commissioners. I am excited to join you this particular week because last week I had the exceptional privilege of joining a significant number of European financial market regulators and prudential regulators at a conference in Stockholm, Sweden. And the discussion really neatly dovetails Kilvar's comments about MiCA and the progress of the trilogue process among the European Council, Parliament, and Union to move forward the development of a framework that will partially address the breadth and scope of regulatory action needed to address or bring into the fold digital assets. I would begin, I guess, by describing where we are in the process. There are an increasing number of proposed bills emerging in Congress, several with bipartisan support. They, I would argue, could be classified in two groups. One group addresses in a very narrow way specific questions, such as the regulation of stablecoins and even more narrowly, perhaps, regulation of a certain sector of the financial market with respect to digital assets or cryptocurrencies. Here I'm referring specifically to a bill proposed last year by Chairwoman Debbie Stabenow and Ranking Member Bozeman in the Senate Ag Committee. Again, another bipartisan bill, an example of bipartisan bill, but very narrowly speaking to the question of how to regulate digital asset commodities. Other bills are broader in scope and attempt to address a number of questions in a single step. And those bills include a bill proposed by Senators Kirsten Gillibrand and Cynthia Lummis, another bipartisan bill making its way through Congress. In the current moment, we anticipate congressional action in large part because as we read the law at the CFTC, regulatory oversight in the digital asset space in the United States is left, especially if we're speaking about cryptocurrencies typically sold on spot exchanges and regularly the subject of discussion. Those digital assets that are not backed by reserves, that wouldn't be described as stable coins or central bank digital currencies, this group of assets would be subject to market regulation. Our market regulation is bifurcated and overseen by two market regulators, the Securities Exchange Commission and the Commodity Futures Trading Commission. I'm a commissioner of the latter. The two market regulators work together hand in glove with remits that are closely woven together. The SEC overseeing regulation of all assets described as securities, and we anticipate that there will be some digital assets described as securities, and the Commodity Futures Trading Commission, or CFTC, overseeing digital assets described as commodities. The gap in regulation from our perspective is with respect to the spot market. For spot market transactions in securities, the SEC has authority. For spot markets, for the commodities overseen by the CFTC, we exercise broad anti-fraud and market manipulation authority and have regularly enforced over the course of the last several years to prevent and to mitigate fraud and market manipulation in the digital asset spot market. But we don't exercise oversight with respect to the spot market for commodities, even in instances where we have regulatory oversight for derivatives. So from our perspective, this gap, the potential that there could be digital assets that are not securities but could be described as commodities and for which spot market authority traditionally requires congressional action, is where we sit. And our hope is that with respect to stablecoins, central bank digital currencies, the spot market for digital currencies that are commodities and not securities, we will see congressional action in short order. We're inspired by the efforts that have been undertaken to move MiCA forward, and we are hearing, at least my experience last week in Europe, in London and in Stockholm, was to hear a discussion about MiCA 2, which I think I haven't heard reflected yet. Forgive me if I missed that in Mr. Beau's opening remarks, but I think the notion that there could be a MiCA 2 on the horizon suggests that Europe is also navigating the difficulty of entering the regulatory framework by going narrow or broad in terms of outlining a regulatory design that addresses the breadth and scope of the digital asset space. I'll pause there, and I'm happy to share more in a second round of questions.
Thank you, Kristin, and good to hear that you have been in Stockholm discussing with European colleagues, and that's a good moment to turn to Girts, because he is from Sweden, and indeed the Riksbank has been one of the leaders, or has been at some stage definitely the leader on CBDC work of central banks when others were not yet looking at it. Now the ECB has joined this group of ambitious central banks. So from your, let's say, private sector perspective, what can CBDC offer, and what do you see in terms of coexistence, CBDC stablecoins, traditional retail payment instruments based on commercial bank money? Those three kind of things are maybe competing in a certain way in the future. So what role specifically do you see for CBDC in this emerging new ecosystem?
Yeah, thank you for excellent questions. I'll try to address them. Yeah, first of all, I think the biggest challenge of CBDC is question of what is a challenge, meaning that usually things progress well if they are solving some big idea. So they are some big idea. However, with CBDC, so far, at least for me personally, feeling is that it's more like fear-driven. So we are doing it because world is changing around us, but then what exactly we would like to solve. For example, when card schema was born, as a story, people around the table were trying to figure out what is a more convenient way to pay for the dinner or for the lunch. So cards were. So what is this underlying idea now for CBDC? It probably still needs to be discovered. Maybe there are, or obviously there are many maybe smaller ideas. And obviously for Europe, specific question is that payments, it is a bloodstream of economy. And we know that in Europe, not all components in this bloodstream or this organism is fully controlled by Europe. So obviously it always has been a target, at least recently, to look how to ensure that Europe is in full control of bloodstream. And then it's not a bad idea to look not for all technologies or old concepts, but look for concepts yet to come, address this need. And it looks that CBDC could be solution for this particular need. However, as it is really technology from the next layer, it creates obvious challenges because of that. It is undermining some fundamental pillars like this bank money or this funding for the funding of financing. And this obviously leads to challenges. And I would still that the biggest challenge of CBDC is a need to pass, how we call it, senior citizen test, meaning that it should be so easy that anybody from society can pick up idea and pick up the concept, pick up solution and work with it. Because we are not speaking now about the niche users in the market, we are speaking about whole community, whole society using this. So it is very clear that these user stories and these user tests now worked out by ECB are really intuitive enough that this any senior citizen qualifies. Another challenge, obviously, is, as you indicated, that we try now to put together two rather different by DNA species. So centralized coexisting with decentralized or vice versa, and then we introduce some waterfall mechanism or whatever, how one is going into another. So it does not seem simple at current stage. And one more thing, or probably last but not least, is currently it is not very much clear what is business model or incentives model to roll it out, and roll it out not only as mandatory, but roll it out in a way that there is continuous improvement of technical solutions, that tomorrow it is becoming more intuitive, and this thing you cannot get through the law. That thing you need to get that society, banks, merchants, everybody participates in making it better. But it can become better only if we solve this mass adaptation. And the last thing, what I really obviously look forward is that this power of CBDC, which comes from the nature how it is delivered. It is delivered by the law, so it means that it is a legal tender. So finally, digital becomes in a way mandatory. So, and from that point of view, it obviously will bring innovations into payment industry and next level solutions, embedded banking, embedded finances will have some catalyst moment. Will CBDC itself survive? I think it is still an open question, but that it will be a major step to next level payment methods, I think that is for sure.
Thanks a lot, Girts. And then turning to our last panelist, Hamish, I mean, if you look at private innovations, and in a certain way, also the DeFi space, is about innovation in payments, partially, but more generally, innovation in payment. How do you see the balance, benefiting from it, incentivizing it, while also regulating it sufficiently? And do you have some examples from the past which can enlighten us on the way forward?
Yeah, thanks, Ulrich. Perhaps just to open, I think it's probably very important to note that striking that balance between the right level of innovation and the freedom to innovate and deliver new products and services and the right level of regulation and control is a very difficult balance to strike. From a financial services perspective, it's not new. However, I think it's almost uniquely challenging in this case, insofar as we're talking about the underlying infrastructures, new technologies that we all continue to learn about, as well as the new products and services that they may then enable. So I think that's an important point to note. I mean, as I guess my background as an engineer, I'm always very keen to understand how far can we push technology? What are the limits of the problems that we can solve? But I'm also keenly aware that the necessary regulation and control is absolutely fundamental to the health of the overall financial system. Because we all know and have seen over the years, recently and further back in time, what happens when some of those controls fail, both to the financial system, but as if not more importantly, to the individuals and businesses who rely on it. Equally, of course, just to echo something that Denis said at the beginning, it is important that that regulation is seen to be clear, fair, and balanced. So it is very much a challenge. Perhaps one of the first things I'd note, and I think we've seen a good amount of this and perhaps an increasing level of this in recent years, is the collaboration between regulatory bodies and the innovators. So in terms of whether it's regulatory sandboxes, which we've seen at the moment, there are many central banks investigating, experimenting with CBDCs who are sort of open to the ideas of the wider community. I think that collaboration is particularly important to strike the right balance, because it is a particularly fine line for regulators to walk. And I think we all must remember that we are all on a learning curve on this, both those innovating and those who are seeking to strike that balance in terms of the right level of regulation and control. And then there are some questions about what of our regulations actually apply pretty well today, and therefore can actually be applied to some of these new technology-enabled services. Which of those provide a good starting point? MiFID was mentioned earlier, but needs some sort of extension or adaptation to recognise this new world we're moving into. And then where are the new ones required? And I think it's important to obtain clarity across all participants with what are the positive outcomes that we are seeking. And they could be about new products and services, access to financial services, better risk management, and as we deploy new solutions to serve those outcomes, what are the key risks that need to be managed? Because if there is a common foundational understanding of what that balance needs to look like, I think then there's a higher chance of the right level of collaboration delivering on the promise that I think the technology is making for us. So perhaps to sum up, I'll probably just talk about four things in particular. I mentioned, obviously, collaboration, engagement in both directions. And ideally, that then begins to lead, for example, to a notion of compliance by design, which is something that we work on quite closely. So how some of these solutions and innovations are delivered with compliance in mind. So the positive outcome and the risk management is inherent in how systems and solutions are designed. Linked to that, number two, but I think very closely, that ongoing consultation. So we see, I think, really healthily lots of regulators and central banks pursuing consultation with a wider industry of providers and users of services, really just to sort of crowdsource ideas and thinking about what is the best way forward for some of these pretty systemically important decisions. Third, I talk about the clarity we just mentioned between the outcomes and the risks. And then finally, coherence. And when I talk about that, I think there's a point about international coherence where possible in terms of how regulations and controls are in place. So it was really good to hear Kristin comments talking about a conference that she attended in Sweden, but also coherence across different types of regulation that overlap and I feel like are mutually independent. So if we talk about digital currencies and CBDCs, we also really are overlapping with data protection, privacy, digital identity, fraud and financial crime. And I think it's important to remember these various different dimensions of regulatory application such that we do strike that right balance and we don't inadvertently create a layering effect, which makes the achievement of the positive outcomes we're seeking harder than perhaps it needs to be.
Okay, thanks. Yeah, lots of good lessons for the public sector representatives in the panel. And yeah, we have 20 more minutes. I guess we have to try to have the second round really fit into that. So moving into the second round, Denis, I mean, you mentioned part of your overview was the digital euro and the wholesale CBDC investigation of the euro system. So I'm sure you created a lot of curiosity. What can we expect? What can you say? But what more will happen in this over the next 12 months?
Happy to elaborate on that under your control, Ulrich, as far as the Eurosystem activities are concerned. Maybe I would like to distinguish between retail and wholesale CBDC. For the retail, I mean, the Eurosystem investigation phase has covered a lot of ground since its launch in October 2021. We have assessed a number of design features for the digital euro to meet the key objectives I mentioned earlier, meaning ensuring the anchoring role of central bank money and our strategic autonomy. From my perspective, three features comes out of this investigation. A digital euro would be akin to a form of digital banknote, usable to pay anywhere in the euro area and in any context, and with cash-like features such as a high level of privacy and an offline payment functionality. The second feature is that its distribution would be entrusted to payment service providers, banks, payment institutions, and e-money institutions, and regulated by a dedicated scheme built in partnership with the market. The role of the Eurosystem would be limited to issuing digital euro units and ensuring the settlement of transactions. And third feature, I mean, restrictions would be imposed on the use of the digital euro to avoid an excessive use and adverse effect on financial stability. Uniform holding limits would apply to individuals. Companies could use it, but not hold it, and the opening of accounts would first be restricted to residents or citizens of the euro area. We have also gained, technical knowledge through the organization of prototyping exercise and the launch of market research. I'm not going to dwell on that. The bottom line is that the foundations have been laid for the finalization of the investigation phase. The Eurosystem is now reviewing all the design options of the digital euro, and they will serve as input to the legislative proposal that the European Commission should present by the summer of 2020 and 23. And so in the fall of this year, the Governing Council of the ECB will assess the outcome of this investigation phase and decide whether to launch what is called a preparation and experimentation phase, to move to the next phase, which would involve finalizing the technical design of a potential digital euro, developing the technical infrastructure of the digital euro, and experimenting with pilots so that we are ready to issue a digital euro if need be. Only after this phase and when the legislative text is available will the Governing Council decide whether to introduce a digital euro. So that's for the retail side. Maybe a quick elaboration on the wholesale side. As I mentioned in my first intervention, the BDF Banque de France was a pioneer in the EU by launching an experimentation program in 2020, and we launched 12 experiments. We have been focusing on two main use cases. First, financial assets, settlement processes recording on DLT platforms and involving central bank money as settlement asset, and second, cross-border and cross-currency payments. We have undertaken 3 new experiments since the end of last year on those 2 use cases to test further, in particular, so-called atomic DVP processes, including CBDC tokens and CBDC exchanges on a cross-border basis. So they are underway. It's premature to draw lessons now, but our experiments are to be consolidated and further developed by the Eurosystem, which announced the ECB announced last Friday that it is going to explore new technologies for wholesale central bank money settlement. So a lot is still underway in terms of experimentation and investigation on both fronts for retail and wholesale CBDC at the current juncture by the Eurosystem. Let me stop there. Thanks, Ulrich.
Thank you, Denis, for the answer. I'm sure the curiosity has been increasing even more, but everybody has to wait then for the announcements to come and the progress to happen. So yeah, moving back to Kristin, I don't know if you want also to comment on CBDC from the US perspective. Europe has really turned ambitious here, and in the US there are more mixed signals we perceive. So any views on that would be appreciated. And yeah, please.
Okay. Thank you so much. I would share, I guess, a few things. I want to acknowledge that for CBDCs, there are prudential regulators and other regulators in our markets who have likely primary authority, or the likelihood is that CBDCs would fall within their remit. I would reference the January 2022 Federal Reserve Initiative to begin to explore, and much along the same lines as Denis was describing. We are in the process of engaging in what you all might describe as a consultation. We have solicited public comment through the Fed on a number of questions regarding what I would describe as money and payment systems, which are as ancient as the earliest civilizations. The difference is certainly now that there are many platforms and mechanisms by which to accomplish these goals. In fact, I'd highlight, before turning to CBDCs, the Fed Now program that really aims to begin to digitize and facilitate a widely adopted payment processing platform. The Fed Now is likely the U.S. playing catch up in many ways. I referenced that I was at a convening of European financial market regulators, including friends from Banque de France, from the Ministry of Finance in France and many other countries, the Bank of England, a number of very important voices represented in the conversations. In fact, 1,000 attendees in person for the event. And what I would share is that in thinking about, from the US perspective, how we proceed, I am influenced by those conversations, but also influenced by conversations I had a few weeks ago in Kenya in East Africa. I sat down with the CEO of M-Pesa, which is a payment platform system, arguably a precursor or forerunner to the notion of digital currencies in some respects, at least in terms of its wide adoption and the potential for financial inclusion of those who have historically been banked or unbanked. These conversations globally are, in fact, informing my thinking about how I engage in discussion with my colleagues across the federal regulatory system. It is true that each department or commission or agency is working within their remit, and in the moment there isn't a single cogent sort of direction of travel, but partially because of, as I mentioned, the consultations that are ongoing among the different regulators. Turning back now to the Fed consultation specifically on money and payments, focused on this notion of CBDCs and how the U.S. might proceed, I'd highlight just a couple of things, and then I'm happy to pause. I know we're running short on time. I think a few things that I might highlight, actually supplementing what Denis just shared, is that we're certainly thoughtful about a number of instances in which CBDCs might be utilized. One of the issues I brought forward in a recent market risk advisory committee here at the CFTC was the potential that they facilitate access, as I said before, in financial inclusion, and also the creation of digital identities. One of the concerns there that Hamish mentioned that I'll highlight here is the protection of privacy, and the lack of a GDPR equivalent in the US might also put us a bit behind the ball in integrating or articulating a regulatory framework for those privacy protections. However, as a previous academic writing in the financial data privacy space, I'm really hopeful that we can craft a regulatory model that addresses those concerns should we move forward. Another couple of points related to design choice that I believe correlate to Denis's earlier comments include questions around payment of interest, intermediaries, and here I would think carefully about questions for all market and prudential regulators associated with custody risk, associated with carefully engaging in risk management in the context of sort of a number of matters. There would not be time here today to explore all of the risk management concerns that might emerge, but I'm sure you can imagine many of them. Interoperability and adoption and questions about the extent to which legal tender status will be adopted are also topics that were captured in the Federal Reserve consultation. And hopefully, as those comments have been aggregated, a summary of those comments was published on the Federal Reserve website, and the Federal Reserve and Treasury both turned to look at this issue very carefully. We will have clear guidance and a clear direction of travel on this side of the pond. I also want to echo Hamish in emphasizing the necessity of collaboration across jurisdictions and cooperation, and ultimately with respect to particularly the non-CBDCs or stablecoin digital currencies, the need for harmonization. I would underscore again with more time the issues that we have navigated with the collapse of a number of crypto firms, a series of financial failures, liquidity crises in that sector last year beginning in the spring with the decoupling for Terra Luna or the unpegging of that one-to-one reserve for Terra Luna and its sister coin, or Terra and its sister coin Luna, followed by Three Arrows Capital and Voyager filing for bankruptcy through FTX's filing for bankruptcy in November. We've just seen a significant amount of concerning market activity in the space, some of it related to allegations at this point of fraud, but in many instances, much broader risk management and corporate governance concerns. So just taking that note as a lesson as we move forward, I think there is much work to be done, and I'm grateful for the conversation that's happening here today, and the conversations I hopefully will influence design choice for the actual asset class, as well as regulatory design.
Thank you so much, Kristin. And I like your reference to M-Pesa. We are talking here mainly on the DeFi technology and CBDC, but let's not forget that traditional finance is full of innovation and payments, and that M-Pesa is an example how this traditional technology can do miracles now, in this case also on inclusion. Moving on, back to blockchain. Kilvar, you mentioned that in Estonia that you were first movers also in adopting blockchain in the public space, and I understood there were CBDC payment experiments built on blockchain. So what was your finding from that?
Thanks for the question. Indeed, the Central Bank of Estonia has experimented on CBDC payment project earlier. Prior to describing this, a couple of words for your context. First, all Estonian residents have unique standardized digital identity, or EID, issued by the state. And second, e-Estonia, as a set of public services, is using a blockchain technology developed for use by the Estonian government in late 2000. It was initially used in such sensitive and critical systems as health and judicial records. This setup, called the KSI blockchain, or just KSI, is able to create digital proofs of time, data integrity, user identity for billions of different data items per second. So far, this technology has proven to be secure and resilient. Now, based on the above technology, computer scientists and programmers created a KSI cash, money that took the form of digital bills or digital coins. For Estonian Central Bank, this was a basis for CBDC pilot exercise. From end-user perspective, users accessed their CBDC wallets and made payments using a mobile app. During the pilot exercise, KSI cash infrastructure was subjected to several tests to assess its scalability, transaction speed, and energy efficiency. Starting from energy efficiency, one transaction with the KSI CBDC consumed 1,400 times less energy than regular card payment transaction, not to speak about the Bitcoin payment, which is consuming way more energy than card payment. Pilot exercise proved that digital bill-based systems are linearly scalable and highly efficient. The system was tested at 2 million transactions per second, where it operated faster transaction times than current instant payment platforms. End-to-end payment time, including settlement, was 0.6 seconds on average. More, when the platform was integrated with EID, it was even easier to onboard customers and to program digital bills. The latter meaning script or smart contract attached to digital bill or digital coin, which makes sure, for example, government support and subsidies will be paid in due time in required amount directly to the addressees as required. So all in all, prior to that pilot, I was a bit skeptical about CBDC. However, such practical examples, at least for me, show quite clearly that also central banks have to step together with or even sit at driver's seat in technological progress.
Thank you. So it's not only CBDC, but CBDC based on the blockchain that seems to have something to bring. Okay, we have to hurry up, unfortunately, but Girts, you spoke in the first round on the merits or the possible merits of retail CBDC. What are the main risks for you that you see?
Due to the limited time, I will probably focus on one, and this is that it simply does not scale up. So it is, you cannot make technology to be loved by law. Yeah, so M-Pesa was loved not because of the law, but because of easiness of use. So, and to make it fly, I think there are three things. First of all, we need to put, or ECB or any central bank has to put usability or user experience over engineering. Yeah, so design over engineering. So this is thing number one. Thing number two, it is critical that we make it appealing to young generation. Fortunately, we live at times that young generation is more influential than previous generation. So they are teaching previous generation. So this is a hope, and this is actually opportunity, and this is actually focus. So we need to make it appealing for the young generation. And last but not least, what our Estonian colleague said, this is the sustainability aspect. So it has to be sustainable. It cannot be a last nail in the coffin of global warming. Yeah. So, and as well, because the young generation look for sustainable solutions. So usability, loved by young, and sustainable.
Okay, thanks. And Hamish, you also a bit the same question from your perspective. What is crucial for CBDC to be successfully deployed? What's your message to Denis?
Thank you. I see I've got 3 minutes left. I'll try and leave you one to close, Ulrich. So I think probably to summarize, there are probably 4 things that I would mention, and most of them have already been mentioned. A bit of a summary. So not surprisingly, use cases, evident value to the participants in the system. And by that, I don't just mean individuals. I mean individuals, I mean businesses, I mean governments who are massive users of payment systems, and the regulators themselves. I think often we see regulators as those to apply regulatory measures and control. There's a question that says, what can these systems bring to make regulatory controls easier to apply and more effective? So I think all participants need to see value in order to drive mass adoption. Secondly, we've mentioned this before, but I think it's really important to mention it because it cannot be understated, is trust in the system. And I think trust that it's secure, trust that it's stable, trust that those are moving. If you're moving money around, it's going to go to where you want it to get to. It's going to get there in a timely fashion. I mean, it's going to be safe. It's going to be secure. I think without security and trust, to be honest, I think the use cases sort of cease to matter, because no matter how good the use case might be, if I can't trust the system, it's unlikely it will be used, and very unlikely it will be mass adopted. The third point we've also mentioned, interoperability. And without interoperability, after Kristin mentioned that, I think Girts and others have mentioned it as well. The system needs to work in a way that supports those use cases. Without interoperability, I think some of the value that could be delivered will be somehow inhibited. And then the final point, again, echoing previous points, is one of understanding. And it links back to trust and it links back to use cases. I think people's understanding and confidence. I think Gert's point about usability is really well made. It's great to have all these wonderful solutions out there, but if they're not usable, if they're not easy to understand, then again, it's very difficult to drive adoption. So just to summarize those 4 things, the use cases and value, the trust, the interoperability, and the understanding. These are things that we need to deliver, but none of these challenges is insurmountable.
Okay, fantastic. That's a good final word. We can find solutions, and if I can use the last minute indeed to summarize, I think we have this fantastic multi-dimensional issue. We have technology coming in. We have different issuers in theory at least. The central bank on one side, the traditional private issuers, commercial bank money-based solution, and decentralized finance, which in the ideal scenario has no issuer. In practice, I think we saw a certain convergence that if we talk today on well-established stablecoins, we have in mind entities which have an issuer, which are backed, but which are somehow related on new technologies in a certain way, like Denis' wholesale CBDC, which is also maybe a traditional product, central bank money, but based on new technology. And of course, everywhere the regulation comes in and has to strike the balance of openness and protection of the public interest. So thank you very much for all of your rich contributions. And then I would hand back to Ben.
Thank you so much, Ulrich, and thanks to all of our panelists there. Great to have different perspectives from central banks, from a retail bank, and from the regulatory side of things, and also from Deloitte, sort of interfacing with all the various different stakeholders there, including users. Very interesting there that the panel sort of headed towards the importance of the user in all of this. If the systems aren't going to be usable and not only adopted, but also mass adoption really is critical for these kind of technology platforms. They've got to be used by a critical mass before they really start to become the lingua franca.